Good day. This is Graham Bibby here on the 18th of December, sending you out a quick Camtasia video following last night's market action. It's pretty unusual for me to send two of these in such quick time, but I thought it's important because of the extent of the rise last night in the US market. Here is the Nasdaq, which jumped over 2.12%, which is the largest rise this year. I want to point out that this may be the bottom, this may be the turning point. We've come back to around resistance levels, but more importantly, this could be a psychological shift in the markets because the market was focusing before on the falling oil prices. And all of a sudden, the Feds come out with what they call a dovish statement, which says that they will keep rates accommodative, that means low, and be very patient in putting them up. People thought because the economy and certain stocks were, companies were doing well, that they would bring forward the rate rising timing. But now it's looking like they're going to be patient because they do realize that globally things are still fragile. So that's a good thing. So I just want to show you here on the right. This is the support level there, which we went below yesterday, and now we've come back above it. And it seems like it could be another one of these where we might get a quick, swift reversal to the upside. I just want to show you what's happening on the stock front. Facebook held in there, it's up, it's not broken out of that channel. If it breaks out of that channel, it'd be great. And the stock that I do love, which is so disappointing because I gave a sell signal on it yesterday, is Apple. So the magical figure here for Apple is 110. If we get back above that, we'll be reversing this downtrend. In fact, I might be able to show you how to put a downtrend angle, as it's called, on here, which is basically there. That's showing you this is the extent of the supply demand. So in this case, there's more supply than demand, so the prices are being pushed down. And here we went below this bottom and this bottom, so we were marginal here and then we went below it. So now we've risen, but we're not out of the woods. This is the damage that's been going on. This is Jazz Pharmaceutical. Again, we went below these support levels. Huge rise last night, 4.23%. You want to kick yourself because it'd be great to get those rises, but you can see this year, especially since the second half of the year, the volatility. So we're not out of the woods there yet. Cores, which we just added, that only went up 0.45. So not everything's joining in. Spirit Airlines stock I still love had one analyst downgrade its forward forecast, and then this is what happened. The other analyst seems to be staying steadfast. We got out of it. We broke down below all sorts of support levels, but a 4.53. The main thing I want to point out is a one-day rise doesn't create a new bull trend. But I am watching it with severe interest because what has happened this year is every time we've had a change in market psychology, and psychology is the biggest driver of the market. Once we've had a change in psychology, and S&P up 2%, this is, you can see, a downtrend. This level here was the final support levels, which we broke below, and now we zipped above it. One day does not make a trend reversal, but it is very significant the extent of the rise. So it may be that we'll have a follow through because certainly we don't seem to be concentrating now on the oil situation. This is the oil fall, which is causing everyone's concern because psychology is the biggest mover of markets. That's what most people lost out on in the global financial crisis and the tech wreck of 2000 and 2003. It's all about investor psychology. Do people want to buy on dips or do they want to sell on rallies? Are they concerned? Are they getting negative? Because psychology and mass psychology can feed on itself to the upside and the downside. So I just wanted to get this out to you because I'm watching everything very, very closely, from even gold. This was the longer term downtrend. We've had a little rally since November, but we were selling off this last week. So I'm watching all these things quite closely. For my Insiders Club FOS, which uses exchange traded funds, I am looking at all these things like, this is Australia. It's fallen off a cliff. So anybody who's got a self-managed super in Australia, you really need someone like me to manage it, because your first get out clause was up here somewhere on the index, because this fund follows the index. And then we certainly had another get out clause here, which is 24 with 21. So that's 15% savings. And from the original sell signal, you'd be 35% better off. That is huge. That means if you had 100,000, you'd now have 65,000. To get you back to 100,000, you need a 50% increase. So I've been finding life a little tough in the Insiders Club, but we're certainly not making 35% losses in a 2 or 3 month period. And our stocks are well designed to seriously outperform the market. Think about this again. Most of my stocks are growing 20 to 30% per annum. The company's earnings of those stocks are growing 20 to 30% per annum, and their PE ratios are a discount to the market. So over time, logic says, and it is a fact, that the stock should at least do the 20 to 30% growth. Where would you rather be? In something like this, or in something that's got that potential and will do that when the market stabilizes? This is Graham Bibby on the 18th of December, saying thank you for listening to me. I've done a quick 6 minutes. I just wanted to talk to you about last night's market movement, and I'm sure I'll be back to you next week. It's coming up for the weekend soon, so have an amazing weekend. Bye-bye.